In today's rapidly evolving business landscape, startups play a crucial role in driving innovation and economic growth. However, the path to success for startups is often riddled with challenges, including limited financial resources. This is where venture capital, VC, comes into play. Venture capital is a type of private equity investment that provides funding and support to early-stage and high-growth potential companies. In this article, we will explore the world of venture capital and startup funding, examining its key characteristics, processes, and implications. 1. What is venture capital? Venture capital refers to a form of financing provided by professional investors, known as venture capitalists, to startups and emerging companies. These companies typically have innovative business models, disruptive technologies, or high growth potential. Venture capitalists invest capital in these companies in exchange for equity ownership or other forms of financial instruments. In addition to funding, venture capitalists often offer strategic guidance, mentorship, and industry connections to help startups grow and succeed. 1. The role of venture capital in the startup ecosystem. Venture capital plays a vital role in the startup ecosystem by bridging the gap between entrepreneurial ideas and commercial success. It provides startups with the necessary capital to develop their products or services, hire talent, expand operations, and scale their businesses. Moreover, venture capital is not limited to financial support. It also offers expertise, networks, and industry insights that can significantly contribute to a startup's growth trajectory. Additionally, venture capital investments can stimulate job creation, foster technological advancements, and drive overall economic growth. 1. Key players in the venture capital ecosystem. A. Venture capital firms. These are the entities that manage venture capital funds and make investment decisions. Venture capital firms are typically composed of teams of experienced investors, industry experts, and support staff who evaluate investment opportunities, conduct due diligence, negotiate terms, and provide ongoing support to portfolio companies. B. Limited partners. Limited partners, LPs, are the investors in venture capital funds. They can be institutional investors such as pension funds, endowments, or foundations, or high net worth individuals. Limited partners commit capital to venture capital funds and rely on the expertise of venture capital firms to generate returns on their investments. C. General partners. General partners, GPs, are the individuals or teams within venture capital firms responsible for managing the fund and making investment decisions. GPs typically contribute their own capital to the fund and receive a management fee and a share of the fund's profits, known as carried interest, as compensation. D. Startups. Startups are the companies seeking venture capital investments. These companies are often in their early stages of development and require funding to fuel their growth. Startups are expected to have a high potential for returns but also come with significant risks. 1. Venture capital investment stages. Venture capital investments are typically made in different stages, depending on the maturity and growth trajectory of the startup. The stages can be broadly classified as follows. A. Seed stage. At this early stage, startups are usually in the ideation or product development phase. Seed funding is provided to support market research, prototype development, and initial go-to-market strategies. Seed investments are typically smaller and carry higher risk. B. Early stage, also known as Series A funding. This stage occurs when a startup has developed a viable product or service and is focused on scaling its operations. Early stage funding is used to refine the product, build the team, and acquire customers. C. Growth stage. In the growth stage, a startup has achieved market validation and is experiencing significant revenue growth. Growth stage funding is typically used to expand the business, enter new markets, and further scale operations. D. Late stage. At this stage, a